In this video, I'm going to outline the key concepts that need to be understood when you're attempting an asset disposal question. In particular, I want to ensure that you are familiar with the distinction between aggregate depreciation and depreciation expense. So aggregate depreciation refers to total depreciation of a non-current asset ever since the asset was first acquired. So that could be many years of depreciation all added up together, whereas depreciation expense is the depreciation just for the current year. So a typical scenario that questions present is that a business owns a number of fixed assets. They're nearly always vehicles, so it could be cars, trucks, vans or buses, but the same principles apply to plant and machinery. So the business owns a number of assets and it's buying and selling assets of a similar kind during the year, and our job is to process all the purchases and sales. So to sort of show the context, we've got the accounting year. So the accounting year in this instance runs from January 2019 to December 2019. So that's the start date for the current year and the end date. And the company owns a number of vehicles which it bought back in time. As you can see, the van 1 was purchased way back prior to January 2019, as was van 2 and van 3. Now, depreciation has been happening ever since each asset was acquired. So there will be a total depreciation on van 1 all the way back from this date here up to the start of the current year. And that's represented by these black arrows. So you can see that van 1 has been depreciated for quite a long time, van 2 for maybe a little less, and van 3 has been depreciated for a relatively short time. But each of the vans has an aggregate depreciation charged to it. Okay. Now during the current year, transactions happen. So maybe a van is bought, maybe a van is sold. So in this demonstration I show a van 1 being sold at some point, represented by this black dot here. So the van is held for a certain amount of time in 2019 and then got rid of. So again, we must ensure that our accounting records are updated to reflect that disposal. If you think of your balance sheet, normally you would have your fixed assets consisting of vehicles, plant and machinery, and so on and so forth. We need to modify the value shown for motor vehicles because a van has been sold. And similarly, we may acquire a van during the year. So we buy van 4 some way during the year, and again we need to update our accounting records to reflect this purchase. And you can see that we would need to also be depreciating that van from this date up until the end of the year. So at this point, what I hope you understand is the general concept of aggregate depreciation and depreciation expense. And in later videos, we look at how to account for transactions such as the purchase or sale of a van